The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, on this first day of September, Basil Chapman here, Tiger Technicians Hour, 877-927-6648. I'm quickly showing the S&P 10-minute chart. I've got to say quickly, it's been all over the show. Tried to rally and then failed. Well, what's really interesting is I had what's called the Chapman wave trend gauge effect yesterday, which suggested that within 2 days, and even works overnight, there should be a 9 to 11 point rally in the S&P E-minis. And that should translate at least to an attempt to rally, but usually if it happens during the session, it's way better than if it happens prior to the session. And we got that. Look, there it is from yesterday. Soon after my show, made a low of 1259.50, ran up to a peak D, pulls back, starts a brand new move, goes to another peak D, pulls back, goes ABCD. And you got a left side, right side price time match, which just took a right. It took a bar, one bar later, went plunging through it, went through the low of the 1259.50 low of yesterday. And now we've got at least an attempt, an oversold bounce that says within 3 bars, we haven't yet done it. This is the third bar. You've got to see a close. This is a 10-minute bar. I don't think you can do it above 1259.50. Otherwise, you're probably just getting a rally that peters out, that just doesn't have the strength. All right, let's do this. We've got the parameters clear, 21.55 on the downside. You break that, you can start a whole new move to the downside. More likely, most of the downside's done, and now we're going to at least attempt to stabilize or move to the upside. Let's get to the numbers. You've got the E-mini right now down 1275, made a peak D in the Chapman wave methodology. Oh, I should have done that. A lot of people asked me about it. I'll just try to get it ready. While I'm getting it ready, let me just go on. So it's in leg B to the downside. The black line is the 9-period exponential moving average. As it made this leg D and then peak D to the upside right there on the 23rd, let me do a vertical line. I'll draw a vertical line. On the left is the daily. In the middle is the weekly. And there's the monthly chart. I've got the 120-minute chart inside here. Don't have to look at it right now. I just want to do this. If I can find this. Okay, there it is. So there's your vertical line. And look what happened when it made the last peak E way back in the second, I think it was the 2nd of August. Look at that. The technicals were starting to fail, but they were way stronger on this previous rally. It was very quickly A to B to C to D. Peak A, peak B, peak C, peak D. And now we've pulled back sharply. What is the saying about what we can expect tomorrow? I'll go through that as we move along. Why? Because finally, all the little ducks have been in order for last week. Confirmed on Monday by a number of charts having a peak D or E in the weekly charts. And that's really important to me. Now I can show you this. Let me go to it right here. Click. In the Chapman wave methodology, the prime objective is to identify the lowest, most obvious low bar and merely count each successively higher peak. Each peak is labeled alphabetically in order A. You break A by 1 penny, it goes to B. You break B by 1 penny, it goes to C. Break C by 1 penny, it goes to D. At D, other things can happen. It could recycle to a brand new buy mode. It could just pop to an E and pull back. It could plunge and have time and price to the downside. That's kind of what you've got to anticipate at D. And if you survive D, you've got other notation that we have in the Chapman wave methodology. So what do we have? Just a question then, was that NGD, or is that NGD the full symbol, or is that natural gas something or other? All right, so let's move on. So what we're looking at is you've gone to there, you went to a peak D that was on the 25th of July, pulled back, and then ran up to an E and then plunged deeply. And then started a brand new move. This is the longest and deepest decline we've had in a little while. So here's the question. No, let me do this. I wanted to run all the numbers. INDU, the Dow is down. Whoa, in leg D, we are short the Dow in my opening call for subscribers. And we've been that way since about the 12th of August, I believe it is. Was it the 12th of August? Right. Yeah. Yeah. The day before the peak E high. And there's your peak E. And now you're pulling back, pull back sharply. You've gone more than the 9 sessions to the downside that you made on July the 20th. So this is something to take seriously. But it's the weekly chart in each one of these that we've got to focus on. The weekly chart now is under the 9-period moving average, but it's intraday, and the week isn't finished. It'll finish tomorrow at 4 o'clock Eastern time. But I've brought in a down channel, and that down channel is suggesting that the MACD holding very well could turn down. The stochastic holding very well in the 90s, now at 89.80, is starting to turn down. There's a chance that we are going to look at some kind of a consolidation going on. The monthly chart so far is really good, but we did have a doji candle the entire month of August, and all we got is this tiny little doji candle, one of the smallest candles we've had in years. And what happened? It turns into this little plus sign, which is what we call a doji, at a high, potential high. So if we take out the low in the monthly chart of 18,247, that's suggesting we could go down to test the 9-period moving average of 17,900. Let's call it 18,900. All right? What can save the day? Let's go on and we'll talk about what can save the day. So the SPX.X right now is also down. It is in trough A, B. It's in leg C to the downside. It's a little bit behind the Dow. No, I'm sorry, a little bit ahead in that it's only at C and the Dow's already at D. It made a peak F top. A peak F top in the Chapman wave has a lot of implications if you start to see sharp declines after that. So we're going to have to keep that in mind. The MACD is terrible. The stochastic is very poor at 39. And you've got the 9-period moving average in the weeklies where it's sitting right now. So this is going to be really important. All the signs were pointing to a potential top, but not what kind of top. It's the way we follow the weekly chart that's going to give us that information. Quickly, QQQ. QQQ is down 37 cents at 116.07. Leg B to the downside. Very strong still in both the weekly and the monthly. The IWM, a little deeper. It's a peak C1, C2. It's a little complicated. That's the one aspect of the Chapman wave where it took me a long time to discover that you could actually fail at the top, not make that D, but there have to be the characteristics of a D. So we'll be watching the weekly chart of IWM, the Russell 2000. Let's go straight to, before the break comes, gold. Gold is now up 6 at 13.18. This is very interesting because if you look at the GDX, which is the gold miners ETF, you've got this left side, right side price time match of 24.80. It went to a peak E at 31.79 on the 12th of August, plummeting down much quicker, down below the Chapman wave inside wedge target line. That target line said by the 9th of September, we should hit 24.80. So we were watching this real closely. What happened? What does the Fed do tomorrow to affect or effect what's going on? The dollar rallied very strongly. It went to peak B. If there's no new recovery high today, and I don't think there will be, but the stochastic strong at 82%. The MACD is quite good. You've got the TLT. It's worth looking at this TLT. When we get back, we're going to talk about that because it's in this wedge type formation and it's just going into narrower and narrower as this wedge comes to an apex. We'll be talking about that as soon as we get back. And crude oil is down, and that is part of the situation here. Sharp pullback in crude oil. Basil Chapman, I'll be back. Dow's down 84, S&P's down 11, and we'll say, well, has this already done what the anticipation of the Fed move is? We'll talk about that as soon as I get back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks, we're back. I had a bunch of questions, so I'm just trying to recall where I was when we signed off. I did say I'll be back. I'll talk about what I think about the Fed reaction to jobs tomorrow, a bunch of things there. Just let me show this chart here. That this is the triple yield. I should put the 2-year in, but I've never had the 2-year and always forget what the symbol is. I think it's TU, but I'll check that in a moment. I just wanted to say that yields are way down. Look, this is the 30-year yield. If I squash this, just to give you a better picture, way back in June of 2007, the 30-year was at 5.408%, 54.08. It's made a low subsequently at about 21.01, right? And that was just a month or so ago. And all of these were in a cluster formation at the top back in 2007. And they've dropped significantly. But if at any point I say to you that let's take this trend line here, it's where we are now is where we were in early 2015. It's where we were at some point, just a little bit above it, 25.10 instead of 22s, right there in July of 2012. So, and there's another one right there, the end of 2008, it dropped down to 25. So nothing too much has changed between what I've always thought of as the Japanization of our bond market. In other words, we will follow Japan and go to zero or close to a 0% yield. That's number one. Number two is within the context of this pattern here, tomorrow is going to have to be a really big surprise, and the market's going to have to just take it as if it's a very, very serious thing, because the TLT will have to drop. I would say it's at 130. Where is it now? 139. Probably it'll drop 2 points. The bonds would have to drop 2 points for us to say this is going to impact the market really negatively. So there's a bunch of things going on, because if I'm looking at the chart here, or just a month ago, actually 2 months ago, we were in the 26 area, 26, 27 area. So what happens here could be the start of something, but it is if they talk about starting to raise rates sequentially, just like I was talking about the sequential peak A, peak B, etc. But it's not just a one-time thing. They're really talking about it because of the agenda that they've spoken to us about for so long, that there's a criteria, they check them off, yes, jobs, yes, employment, whatever it is that they want to check off, and hourly wages, just the whole thing. If that fits what they're looking at, they have to follow it. The market could be at a completely different point. In fact, I'm looking at Cintas, CTAS. I'll get to IBB in a moment, a question about that. Cintas, which is overalls, anything to do with the rental business of apparel, etc. And it's making a leg D, still very good technicals, but the weekly chart has just snuck to a D by pennies. And I'm looking at it and I'm saying, and the monthly chart is vertical in a leg D. I'm saying, gee, wouldn't it be interesting if we're in fact just on the edge, the precipice of having at least another one of those rotational short-term corrections. I call them rotational recessions because, believe me, if you're in the area that was recessioning like the IBB or the healthcare at some point, whatever recession it is, while others are working very nicely, you're in a recession. So I'm looking at this and I'm saying, are they about to do something really weird? But wait a minute. I have to go back to these charts because the yield is saying you've got a lot of room on the upside. Until you get to the 36 area, 3.6, and you're in the 22s right now, I don't think there's going to be a breakdown of housing and all these other things. So just let's keep that in mind. A quarter point is nothing. It's the way that the market perceives what's going to happen next. Now look at this chart here. This is the chart. Remember, WOOD, wood is the iShares Global Timber and Forestry ETF. I always talk about this. And my question was, have we made a peak F, or the all-time high, the February high was of 2015 was at 56.69, and we slumped down to the 38s. Now we're at 49, let's call it 50. Has this broken out? Is this a brand new leg in wood? Because this is the World Global Timber and Forestry ETF. Well, I look at the housing sector, the Philadelphia housing sector. It's made a peak D, and it hasn't been able to rally. It had a pop-up last week, and then it failed. That's going to be very important because if Wednesday, a week from yesterday, we're looking at the HEX index in the 257s at new recovery highs, and wood, WOOD, is breaking out from the 50 area right now. Is at 53 or higher, 52.20 and higher, let's say. And those are the things that I'm looking at, and I'm saying, wait a minute, we know what to look for. And if Cintas hasn't taken this as a leg D, in which, remember, I showed you the leg Ds right just a moment ago, to say, I've had enough, I need a rest. And instead of being at 100, it's 117 and a half right now. Let's just say it's it's under 115, it's at 114.53. If instead of being at 114.53, it takes off and it's at 120.80, that is significant. That raises the base. It means that, yes, going parabolic, but it raises the base because it says, wow, all the resistance you would have looked at with trend lines and stuff is not really working because I'm in this beautiful up channel. I want to stay in that up channel. And that's going to be very important. So remember, it's not, as I said to subscribers this morning, it's not what they say, it's not what they do, it's how the market reacts to whatever is said or done. Okay, that's really important. And I'll give you parameters. I'll do it a couple of times. I'm going to do it now. I promised subscribers that I would go to at 3:30. I'll do an update. I have no idea what I'm going to do at this time. I really want to assess it over the period of the afternoon. As I say, we were short from almost the top, maybe 80 points off the all-time high. So we have a little bit of comfort. I have to tell you, I've had in my Traders Corner, that's where we have all the stocks, what we're looking at, etc. I've had the three times long and 3 times short Dow sitting there saying, I don't really know which one to choose. We could do it on a short-term basis. We can get some play. But I'm really looking at the next move that is a move that's going to take us for weeks, 3 to 6 weeks to the downside. And we've already had a little bit of time from the 15th. So it's 2 weeks. I'm looking for that kind of move. And this is what I'm thinking. So based on I don't want to go into this. This is the Chapman Wave 5. It's a mix of Elliott Wave and Chapman Wave. It's actually just Elliott Wave in concept, but now I have new techniques that I'm using that make it Chapman Wave 5. I said that I gave an alternate count the other day that 3 could have been a 5. We did get a very strong pop-up, but I said something's not right. It looks like we still need to go down at least one more time in the Dow. So I'm going to move it away, and I'm going to call this 5 right here that says by the 1st of September at 4 o'clock, we should be getting close to 18,247. The low today was 18,295. So a lot of it has been achieved. So here's what I'm thinking. Let me just check something here. Yeah, this is what I'm thinking. Thank you for mentioning that in the den, because it was going to be my next point of action, is to go to GE. I want you to look at this chart as we go to the break, and you'll see what I drew yesterday. I discussed it yesterday. What happens if 31 breaks? I'll be back. We'll talk about GE. We'll talk about the market. We'll talk about
platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Folks, here's the 10-minute chart. We spiked over the 1259.50 area just in time. Just made it. And that's broke down 1, 2, 3, 4. Didn't just make it. Actually, now this has to be a brand new buy signal if it's going to do anything at all. So at 2159.75, 2160, there is no choice. Another move down underneath 2158 is very negative. Pushing into 2162. My thinking is that a chunk of the selling has already taken place, and now the market should be fairly sanguine. Sanguine, probably not the word because people are very nervous. It should It should bounce just a little bit more, and then it might falter. Okay, so the housing sector, here you are. You're at peak D in the weekly. You had a single leg A up, and it looks like a failure so far. Now let's just go to the nitty gritties of what at 8:30 tomorrow morning the report comes out. There could be a single leg up, and then it fails. It could be a single leg down, and then it comes back. What would constitute for me a confirmation that there's going to be a deeper decline, or something that says you're selling the rumor and buying the news? In other words, we keep coming down into the afternoon, overnight maybe even, and then out of the blue, whatever happens, the jobs number is interpreted as being favorable to a rally in the market. It doesn't matter what it is, okay? It could actually be one of those 185 or 200 numbers and 1,000, and everybody says, kind of what we expected. Now what he was supposed to do. It's not a major move, 100,000 up or down from what you were expecting. So let's just say numbers, that's all I want to do. I'm going to go to the VIX index right away, because you know that I do that all the time. That's my favorite bailiwick. Now I'm going to just move this away just a tad, put that back again. Okay, what are we looking at? At this particular point, at 14.12, it's strongish, but it's in the lower quadrant. How do I pick quadrants? Really a quintus or whatever it would be called, 5. Let's call it in the teens. 15 is the medium number, 15s. If it's coming down and then it goes to 15, that's bullish. If it's in the 12s and goes to 15s, that's bearish. It depends where you're coming from. Now, what's really important for me is this looks like it wants again to go to a leg D above 1493. Hey, maybe it does it by the end of the day, and then tomorrow there's a surprise. So here we go. I don't care what the words are. The action of the market is this. If at 10 minutes past 10 tomorrow morning, on the 2nd of September, the volatility index is above 15.70 and holding, and the market is triple digit down, the Dow is below 18,200, and the VIX is in the 1570s or higher, I would suggest to you that the selling will probably continue, even if there's a bounce a little later on, but there's a really good chance that next week is a weak week, but we start to look for, is there a chance that it's a short-term pullback or is it an intermediate term? And the weekly chart will give you that. So let's stay with the VIX for the moment. I'm not going to look even, I've got the weekly chart there in the middle. I don't even look at that. That's at 16.58. Believe me, if we get to 1560s and hold into that 10 past 10 area, there's a really good chance that weekly chart can even climb to 1658, if not Friday by Monday or Tuesday. So this is what I'm looking at. Within the context of this cup formation, it's more like a bowl formation because it's taken time. It isn't a deep, it's stretched out. It's not just a shallow cup that goes down and then up again. It says that you could get to a D before tomorrow, and then all of a sudden the news is interpreted really well. The market doesn't have to go up 150 points, but it holds really well. It doesn't break down. It maybe pulls back a little bit and then shoots back up. And you've got to get your GE looks terrible. I'm going to go back to that in a moment. GE suggesting that we're going to go down from here. I'm just saying this is what I want to look for as a positive. I want to be prepared for that. So if instead of being that 1570s and the market is down triple digit, there is a reversal in the volatility index and it's at 1410 right now. And it actually closes at the 2-hour bar, 9:30 to 11:30. That doesn't work out. All right, I'll have to do it a different way. If the VIX index at 10 past 10 is in the 1370s or lower, and the market is 60 points Dow, 7 points S&P, 10 points in the Qs, I would suggest to you that we're going to go choppy, rotational with maybe even a lower highs and lower lows scenario but the major thrust of a down move will be curtailed. That's what I'm looking at as a potential, right? So making it clear, 1570s at 10 past 10 tomorrow morning in the VIX index, triple digit down. Watch that 18,200 level. It's going to be critical. If there's just somehow it's all ameliorated, that the selling and nervousness is it's just a very orderly thing. The Fed stresses that we're still looking at data, but this is the situation that there's a 60% probability that in December we might raise it by a quarter point. That's something. If they say the data says that next week we're going to raise, or today we're going to raise, that's something else with the market, because that would be a surprise if it's that sudden. And they might want to do something right now to be able to get selling out the way so that by the end of September or October, the team can come in and save the day for the elections. That's just the way it works with the Fed, even though they're supposed to be theoretically completely unbiased. But it just happens. That's your boss. You're working for your boss. So that's the way I'm looking at it. On the upside, a break in the Dow above 18,550s by Monday or Tuesday would be really good action. It doesn't say, hey, now we're going spiraling to that all-time high again. It just says, good. Now we can rotate and correct for a little bit longer and see how the housing sector works. I'm watching the semis. Believe me, the semis are on my watch list. Look at this. Semiconductor, peak F hasn't made a higher high than 2 days ago of 66.65, holding well, but just hugging that 9-period moving average. Leg F in the weekly chart, that is incredible. Look at this, straight up. This is semiconductors. These are utility stocks. I mean, these are commodities. And look how strong it's been. Saying something. And this has to do with Syntas. This has to be saying things are not that bad, okay? So here we go. GE, look at that chart. I'm a little nervous about it. Why? Because it has the potential to come back to the 30.20 200-period exponential moving average and what I call an inverted Chapman wave stalk leg, or a Chapman wave propeller shaft. There's the upper blade. There's the fulcrum. Oh, I hate to have that as a fulcrum, but let's call it a fulcrum. And now you're going to go down. You don't have to go down an equal amount, but you do go down, and that would be all the support level, 30.41 and 30.20, and it's down 25 cents today. It's down 8.82%. It's double what the S&P and the Dow are down. So I'm a little concerned. If you go to IBM, it's just under the 9-period moving average. It's using time more than price. Technicals are not great. If you look at Triple M, it had a nice pop-up, and then it just went to a rectangle formation. It sort of looks like an arch formation forming over there, right? Got to watch it real closely. And UTX is almost the same thing. It's already started on its way down. So I have to be on the daily charts. I'm saying be careful, because they can affect the weekly charts. I'll be right back. Basil Chapman, Tiger Technicians Hour. Let's see what's in store for the Dow in the next 20 minutes.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active effective trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
So I had a question in the just about LVS, which is Las Vegas Sands. I used to have this all notated. In fact, I can't remember. I think it was MGM that we traded really well once, shorting it. This is ABCD in the weekly, in the monthly. It's running now. It's a brand new A, and that's going to try to make a B. Yeah, this is bucking the trend, and that's what you want to find in this market. What stocks are kind of ignoring what's going on? It did break the last high. All I'm saying is that at 53, right now up to 90, it must hold 49 next week, even if the market pulls back, and it starts to pull back. So far, it's acting really well. Would I buy it right now? You know what? I would say I'd have a little tiny position at 53.10 because it seems to be breaking out, but only a small position. The real position would be to try to fill that gap, but don't fill it completely. 51.40-ish is the level to watch. And if you can get that, I think that's really good. So, but only small position. I wouldn't get carried away in this market just yet. Let's find out, LVS is basically a China proxy. Well, I was looking at that the other day. China's holding very well. It did make FXI, that's the iShares China large cap. It went to a peak E top at 37.99, just missed a round number high. Peak E, pulled back, but it's holding quite nicely. So this is going to be very important for all the markets coming up this week. If the FXI 37.14 breaks 36 support, the weekly chart starts to get a little bit negative, but the technicals are still very good. I mean, price-wise, because it hasn't taken that 9-period moving average since it broke out back in the first week of July. So I do like it, but I would be a little careful. Let's get some kind of result tomorrow. There's really no rush. Let's say if the market soars 150 points. It's just telling you that certain stocks are going to do very well, and you want to see which ones work tomorrow. Let's just say it drops 150 points. Let's just say it drops 300 points tomorrow, because all the little ducks are in order to do that. I'm saying I would prefer myself to see a rotational correction, but let's just say it does that. Drops $300 in the Dow. It's just telling you which stocks are not to look at, and it tells you which ones that are holding well are the ones that are in play. It's just it's evidence that you want. Evidence-based investing is really what you want to be looking at. So a question about HHO, and that's heating oil. In the heating oil, we've got 1.3868. I'm really concerned for those of you who are really bullish on the crude oils. Look, if I go to the SCO, which is the ProShares, ProShares Ultra Short Bloomberg Crude, you're only in leg B to the upside. It could fail, but it is saying that there is buying there, and that buying is kind of matching what we're seeing in the market. The Dow's down 82, S&P's down 10. So I wouldn't be long. Would I be short? I'm going to say it again. Why don't you just look, wait, have patience. In 12 hours, in 24 hours time, the market's going to be. When I do the show tomorrow, it's just going to be a lot clearer as to what's working and what's not. Why? Maybe TBT is going to be the play. At this point, it's just looking like, TBT? So let's see what happens, okay? If you're looking at XOM, look at that H pattern we spoke about yesterday. Be careful, I said. So I'm just going to try to avoid the areas that have been lousy. If you go to the IBB, I've been saying that we have not got into the new position yet to reshort. We had a huge 111-point gain and then another 20, I think it was. And I just haven't done anything because I did see it coming back down. But I want to see what happens by Monday to say, okay, now, is the IBB, the biotech sector, going to be a bounce for fund managers saying, I don't want to be in the oils, I don't want to be in this, I have to put my money somewhere. They've been beaten down and they'd love to go to the beaten down stocks? Or is this it? I do believe it. I've got both in Chapman Wave methodology and Elliott Wave, I've got a target of the 240s. We've been already to 240.30. I'm sorry, 240.30 is where we've been. I've got a target of that low right there, April of 2014 of 207.48. That is my longer term target. So this is just counter trend. So if you are short, stay short the IBB. Let it tell you by spiking above 293. That'll say, whoa, be a little careful. I'm back in that trading range. Just keep staying your positions. Are there any other sectors that have been seen as top, completed wave 5 and are headed downstairs? Yeah, I think that we're looking at I'm going to Google. I don't do the alphabet. So they've recycled A, B, C, D to a peak D. I'm watching Google really closely because it's in a major sector of the high techs, of the, I can call it high tech, I guess, social media. But at the same time, it's had a huge move, and it looks to me like it wants to consolidate. The question is, no, I don't know if Google's seen its major top. No, are you talking about the major top that it won't see that top again? IBB is the one, and I have to put the PPH in that area as well, as that the high that I spoke about a long time ago at 74.97 for the Van Eck Vectors Pharmaceuticals. I think they're in trouble, just like the biotechs. That's certainly areas. I think the USO looking out. I just think that this is done. Crude oil, it's had its day. I mean, there are just too many options. It's like, what did Amazon do to the entire sector of retail? It was a leapfrog of anything that had happened ever before. So I think that crude oil is done. There's been a leapfrog. There's just new technologies. Automobiles, they're having combinations of the engine and battery. They're doing all sorts of things. I just don't see it. Now, if you want to look at something like the XLF right now, look at that move to the downside. 24.31 down 25 cents in a leg E. And that's the reason why I say to subscribers, be careful. We do want to nibble. We've got a long position. I don't want to talk out of turn here. I want to add a little position lower down, and if I don't get it today, that's fine. I can wait till tomorrow. But I think it's one of the better sectors right now, but not after this move in leg E. I have to wait to see what happens. Leg E in the weekly, leg E in the daily, and a B in the monthly. But the B is a retracement mode. It hasn't made an all-time high, unlike some of the other like GE. Acting lousy, but it's already made a peak C in the monthly. That says it should go to a D. That's the way I look at it. All right. Now we want to look at another question. I just wanted to get this before we go to a break today. Okay. Oh, all right. That's good. Someone canceled something that I was supposed to do. I like that. There we go. Goldman Sachs. Goldman Sachs was a question. Goldman Sachs is in leg alternate count G/E. I'm going to be watching these financials. You see, the financials have not soared. Oh, there goes that beeper. The financials have not soared. They've done very well. And they aren't a leading sector to the extent they are at all-time highs and just leading everything. They're retracing. So I need to put that into the context of maybe what's going to happen tomorrow, and I'll try to talk to that again when I get back. Basil Chapman, Tiger Technicians Hour. We're about to go to a break, and the Dow's now down 91, S&P's down 11. And we've got another question. So Goldman Sachs is in the same category, maybe a G. And Sarah asked about AXP. AXP is American Express, made a peak D double top. I think that's actually an E top, and now it's pulling back. Everything is in the weekly, daily charts. It's saying sell modes. Be careful. I'll be back.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with Swim Lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Hi, folks. So CME was mentioned in the den. I looked at this about a week ago, and I thought, gosh, CME, is that the CME group? That's the Chicago Mercantile Exchange? I think it is. There's the Chapman Wave stalk leg formation, long leg up, body, neck. It's in the neck formation right now. Leg C, I got to make sure that I've counted this correctly. A, B, and that's not, yep, that's the C in the weekly chart, and a D, 3 Ds in a row in the daily, and it's pulling back a bit. So this is acting very well. I can see it pulling back, but keep your eye on this one. I was also an email about DDD. I said a person got in at the 1360s, I think. I said it was right there yesterday's close. I said, why don't you take a half off and then put a tight stop on the second half, because it's had its move to peak D and E right there, E. So DDD, 3D systems pulling back. So we want to look at what's working, what's not. The question about AXP was because the 10-year is moving up. If a 10-year moves up, will American Express pull back, should be shorted? You know what? I would say yes, but we don't really know what the market's going to do tomorrow with the news. If you to short it now, if it was yesterday, I would have said you could take a chance of shorting because all you got is 65.50. You got less than 60 cents risk. But now it's more than that. And it's not only that, it's a gap up that you might be facing. So I'm just going to say, I'll deal with that tomorrow. I think you're correct. It was a good eye. I think you nailed that one. Is it a short? I think yes, but is it a short right now? I just don't want the risk tomorrow going into tomorrow. That's all. So I'm just going to say, yeah, I'm at 64.47. If it breaks 63.50 by Tuesday, that's going to that second arch formation in the weekly chart. It's not good. But in the meantime, as a short, is it going to drop 10%? I just don't know because the weekly chart technically is still very strong. Okay, now I think I've covered almost all the questions we had over there. Copper, let's do these. I want to do the commodities. I've already told you what I'm looking at in the VIX index, etc. Let's just go to the commodities. High-grade copper trying to form a base here. It's just really important that it holds this area. Otherwise, if it breaks under 2.06, we're looking at a pretty sharp pullback. You've got wheat, das wheat. Nice little candle today, but it's just the start of attempting something. Well, what did have a very nice move is corn. Look at that. Corn and soy. Corn is trying to bounce and soy is trying to bounce. So, no, soy is just kind of there. It's testing the left side low. It's broken below it of 943, and today's low is 937. So, the commodities, I'm a little worried about what's going on. So let me just put it real succinctly. Be careful. And if the trade at this point, we've got a sell mode in almost all the indices in the daily charts, not yet the weekly charts. If that kicks in by 4 o'clock tomorrow, you're looking at many weeks to the downside. It's either time or price. It could be time and price. So don't rush. Let's just say the market's down 300 points. It tells you that the following week, on Monday, you can start implementing other shorts. You might have missed the best price, but you've got the trend. If we're up or even unchanged tomorrow by 4 o'clock, then I think we've got this rotation that says the XLU, watch it closely. Good question from an email. It's at 48.99. It goes under 48. That's a problem. If it goes over 49.80, it says, hey, I'm okay. I'm surviving here. But the weekly chart is negative. Utilities. So, going to wrap it up. I'll be back tomorrow. Check out my opening call. And I will have a 3:30. I've got to keep reminding myself because I've never had a 3:30 update this afternoon, just to see if I want to make some changes or want to do anything, or just hold hands and say, hi everybody. We're not going to do anything. We're waiting for tomorrow at 8:30. I don't know what I'm going to do. I want to see where we close, and there's certain stocks that are really important right now I have my eye on. And we might take a short with a tight stop for tomorrow because there is one area that looks like it might be vulnerable. Folks, I'll be back tomorrow. Have a wonderful day. Stay tuned for your swimming lessons. Stay tuned for all the great hosts.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.